Welcome to our channel, SNK & Company. In today's video, we bring to you the latest weekly updates on income tax, GST laws, and corporate laws. Let us begin with updates under the income tax laws. In the case of Jayshribhan Jayantibai Palzana versus Income Tax Officer, the Ahmedabad Tribunal held that where a resident individual has opted for taxation under the new regime and his total income is below 7 lakh rupees, he would still be eligible to claim rebate under Section 87A against tax payable on short-term capital gains arising from the transfer of listed equity shares taxable at special rates under Section 111A. In another case, Sushil Kumar versus Assistant Commissioner of Income Tax, the Delhi Tribunal observed that where the assessee submitted complete documentary evidence including audited books, stock register, invoices, ledger accounts, and party-wise explanations, and the assessing officer without pointing out any specific defect or discrepancy rejected the books and estimated profit at 10% of turnover, such invocation of Section 145(3) and rejection of books was unjustified. Further, in the case of Deputy Commissioner of Income Tax versus Asian Consolidated Industries Limited, the Delhi Tribunal held that where the assessing officer made an addition on account of subscription to share capital by treating the same as unexplained, but the assessee had discharged its onus and had submitted relevant details and evidence with respect to the genuineness of the subscription towards share capital, the impugned addition was liable to be deleted. In the case of Gupta Ashok Kumar versus Income Tax Officer, the Hyderabad Tribunal held that where the assessee had received loans from 3 companies and his NRI daughter through banking channels and had furnished confirmations, bank statements, and financials to prove the identity, genuineness, and creditworthiness of the parties, an addition under Section 68 merely based on a retracted third-party statement without rebutting the assessee's evidence was unjustified. Lastly, in the case of Odavji Chanabai Paraj Charity Trust versus Deputy Commissioner of Income Tax, the Mumbai Tribunal held that where the assessee trust filed an application for registration under Section 12AB and the Commissioner, exemptions, rejected the same on the ground that the assessee intended to apply funds outside India, since the trust deed clearly laid down that its objects and activities would be confined to India only, such rejection was not justified. Now, moving to important updates under GST laws. The Prime Minister, in his Independence Day speech, underscored the importance of the next generation of reforms under GST which would bring relief to the common man, farmers, middle class, and MSMEs. The government has unveiled plans to simplify the GST system into just 2 slabs of 5% and 18%, with a special 40% rate for luxury and sin goods. The Calcutta High Court held that where the State Tax Authority denied input tax credit solely on the basis of the Central Tax Authority's verification report without independent evaluation, thereby violating principles of natural justice and CBIC guidelines, the matter was to be remanded for a fresh order after furnishing the report, inviting objections, seeking the Central Authority's comments, and granting a personal hearing. The Allahabad High Court held that if excess stock is found in a survey, then proceedings under Section 73 or 74 should be initiated and not proceedings under Section 130. In another ruling, the Allahabad High Court held that where due to a software glitch in refund form GST RFD01, the petitioner's CGST was wrongly recorded as IGST, and since entitlement was undisputed and the error was merely technical, rejection of the refund claim without issuing notice or granting hearing was not justified, and the matter required fresh determination. Now, let us turn to updates under other corporate laws. The Supreme Court in the case of Sohit Chaturvedi versus Deputy Director, Directorate of Enforcement, held that where the appellant had committed various financial frauds by misrepresenting facts and furnishing false and fabricated documents to banks for availing loans, and even if proceeds of crime were not available with the appellant but had been siphoned off, properties of equivalent value were rightly attached by the Enforcement Directorate. Finally, the Securities Appellate Tribunal, Mumbai, held that where SEBI had issued a show cause notice to a company secretary alleging that he, being a signatory to the public announcement made by a company for buyback of its equity shares without having adequate free reserves, had misled investors and shareholders, but no specific charge or violation was pointed out by SEBI, the penalty imposed on the company secretary was to be set aside. That concludes this week's updates on income tax, GST, and corporate laws. Stay connected with us for more informative and timely updates on tax and regulatory developments. Do not forget to subscribe to our channel, SNK and Company, and press the bell icon to receive notifications of our latest videos.